over a very short amount of time. This was just a couple of hours here using the day trading strategy you're about to learn throughout this video. And we are going to completely break down this trade and the entire strategy a little later in the video. But right now, as I said earlier, the only way for you to be able to make money using this strategy is by understanding how to identify a trending market. So let's dive deep into identifying trends on a price chart right now. Just to be clear, I do not only use this strategy for day trading, and I also do not only use it in the Forex market. This is a strategy I use across all time frames and across the stock, Forex, and crypto market that I trade in. So now that that's cleared up, let's get started by explaining the difference between major and minor swing levels, because that is something that is absolutely necessary for you to be able to identify trends in the Forex market correctly. So first off, for major swing levels, they are the top and the bottom of our impulsive moves. Let me explain that. An impulsive move would look like this. Here's the bottom of our impulsive move. This is the move that breaks through previous structure. That would be our impulsive move. So the bottom of this would be a major swing level. The top of this move would also be a major swing level. Now, as we get this pullback, the bottom of the pullback would be a major swing level. And then we push up as we break through previous resistance and we get the top of an impulsive move. This is a major swing level. Then we pull back, the bottom of the pullback, major swing level, and the new structure high as we push up here and break into new highs is another major swing level. So there's not really any way to make this completely objective, and I know that sucks. I know it's a lot easier with completely objective rules, but I've not found a way to make this completely objective yet. But this is the way I identify major swing levels, is the top and the bottom of my impulsive move. Remember, in a trending market can look like this and do this and then go up and then do this and then go up. And the levels we're paying attention to are major swing levels during a trending market. What I mean by that is we have a high here. Once we break through that high, what's our rule? Once we break through that high, we can't see the market come down and break through the lowest low of the pullback. If it does, then we do not consider this market still in an uptrend. But as long as we stay above it like we have here, then we are considered to be still in an uptrend, especially when we come up and start breaking into new highs. That confirms the continuation of that uptrend. So the major swing levels in this case would be our initial starting point, our new structure high, our pullback, our new structure high, and our pullback. Now, the thing is, you're not going to know this is a major structure level or a major a major swing level until we break into new highs. And that's just because this is the level we don't want to see broken by the trend. So that's totally fine. We need to see the market break into new highs before we know that our pullback levels are the bottom of a pullback. There's no way to know that this is the bottom of a pullback until we break into new highs, because the pullback could continue, right? So with that being said, hopefully now you understand what major swing levels are. In terms of minor swing levels, it would be everything you see in between. So this would be considered a minor swing level. This, minor swing level, minor swing level, minor swing level. In terms of a trending market, we do not pay attention to those. We do not use those for anything. We'll do a bearish example now though, and what I want you to do while we're looking at this chart is try to point out the major and minor swing levels for yourself. I'll give you about 5 seconds. Pause the video if you need to and try to point those out before I do.